Hey everyone, we got some great news for Plug Power stock investors as the company got a $1 billion loan guarantee from the Department of Energy to develop green hydrogen. So I'll discuss what this news could mean for Plug Power stock investors and what you should expect going forward from this green hydrogen company. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the company announcing that it got a conditional commitment for an up to $1.66 billion loan guarantee from the Department of Energy LPO office to finance the development, construction, and ownership of up to 6 hydrogen production facilities. So really good news for Plug Power, which is really strapped for cash and can take cash any way it can get it right now. But let's break down this news here. So this is a conditional commitment. That means it needs to meet certain criteria to receive that full 1.66 billion. It's up to 1.66 billion. It's very likely that it's going to be much lower than that because it may not meet all of the requirements to receive that 1.66 billion. It's for ownership of up to 6 green hydrogen production facilities. Each one of these facilities is very expensive to build and maintain. Plug Power may not decide to build all of these because even at its current level, it's losing so much money on the bottom line, which I will share with you. So while it is good news and the headline number is much larger than may finally ultimately end up going into Plug Power's pockets, it's still good news nevertheless for a company that is absolutely desperate for a cash infusion. Now, while the loan is good news, let's take a closer look and understand why the company needs loans to begin with, right? Remember, loan is just borrowing money. If you're getting excited as an investor about a company being able to borrow money, there is something seriously wrong with that investment. Borrowing is not generating revenue or profit or cash flow for a company. Borrowing is going into debt. So going into debt is not something to be impressed with, but it's something that gives the company a little bit more time to get things right, which I don't know if that's going to ultimately lead to Plug Power being successful in the long run. In the latest quarter specifically, its revenue collapsed from 210 million down to 120 million. Okay, even while its revenue collapsed, its operating loss increased. It lost 209 million in the same quarter last year that ended March 31st, and it lost 259 million in the same time this year. So it's losing more than twice as much money as it's generating, right? It generated 120 million in revenue. It lost 260 million. How much longer can you survive with that kind of equation, right? With that kind of cost versus revenue. The trouble is, even at existing pricing, it's not really growing. It actually experienced a huge drop off in revenue. Demand in the market does not exist very highly for its products at current prices. And so revenue is collapsing. So if it were to, let's say, raise prices so that it can better match revenue with cost, imagine how much lower revenue would fall if it tells its customers, we're going to charge you higher prices. So while the idea of green hydrogen is exciting and it would be great for the environment and all of that, the actual market dynamics are not in Plug Power's favor. And you could see that in their financial performance. That's why they so desperately need loans and they need cash from investors just so that they can continue scaling, building more and more and more capacity with the hopes that at some point in the future, they can be in better balance in terms of revenue and cost. Now, unfortunately, Plug Power has lost a ton of money for investors. You can see if you were one of the unfortunate folks that invested in Plug Power stock in 2021 when its enterprise value was close to 40 billion, you've lost over 90% of your money. It's now trading at an enterprise value of just 2.59 billion. And you could see the just massive trend downwards in enterprise value. There's been several moments when investors thought that the company was going to recover, but in all of those moments, the valuation just continued to trend downward because the ultimate fundamentals of the business are not sustainable. It's just losing so much money in the course of operations. It needs to continue to go to investors and the government and hope for more money from investors and outsiders, because just operating the business, it's going to continue to be negative for a very long time. So it needs bailouts. It needs people to give it money so that it can lose money in its operations, in the hopes that at one point, if it continues building more and more scale, it can lower the cost enough where it can be at least self-sustaining. I don't know when that will happen. I'm not confident that it will ever happen. That's why I've had Plug Power stock rated as a sell for some time. I've told investors for over a few years now to avoid this stock. And I last updated that recommendation on May 9th, reiterating investors avoid this stock and not get too excited about these kinds of announcements, because these kinds of announcements fundamentally do not change the business foundation where revenue and cost are not aligned, right? The revenue is here and the costs are here, right? Something in this equation needs to change in order for investors to truly feel strongly about its prospects in the future. If it's, losing this much money, right? You can give it $1 billion and in the course of operations, that money just goes away, right? Because every day it's just losing money. So if you're in the habit of losing money and we give you more money, you're just eventually going to lose that money as well. So it would be more exciting if Plug Power would demonstrate improvement in that fundamental equation of revenue minus cost. That's where I think investors should focus on when looking at Plug Power. And these kinds of announcements, it's just more time. It just gives the company more time to get to a better balance between revenue and cost. But it's had a long time already. It's been around for several years, and it hasn't very much improved that equation. So I don't think it would be reasonable for investors to expect this loan to change those dynamics. There needs to be something outside of a loan, something outside of investors giving the company money. There needs to be some improvement in the cost line item or the revenue line item to change how this business performs and its trajectory over the longer run. Still, let's not take away from the good news that this gives the company more time to figure things out. It was good news, right? It's better than not having this money. If they didn't have this money, they would approach disaster much more quickly. Now that they have this loan, they have more time to figure things out. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.